Hey everyone, it's Elise. Welcome back to the channel where every week or so I talk about all things personal finance. And today I want to talk about how I've noticed that I am making crazy returns on the stock market and I'm wondering if it's going to last. So it made me do a little bit of research. But I want to start by saying is that and by it I mean the stock market, still to this day remains honestly a complete mystery to me. Because when it's supposed to be good, like the experience of time has taught us, I found that it's bad, and vice versa. When it's supposed to be bad, typically I'm finding that it's good. I'll give you an example. These last couple months. So typically they say that September is red and that you lose your returns. I don't know why, but that's what they say. Like that's typically a red month. Well, this September in 2024, it was a great month. And I was like, well, what happened to the redness? Okay, fine, went by my business. But then October came around, and October, thousands of dollars were lost on my accounts, across several accounts. And I'm just like, there's no rhyme or reason to this. And ultimately, I decided I'm going to give up on trying to kind of say that I know what's going to happen, because I don't. And that brings me to the topic of this video, where I'm just trying to make sense of like how things have been going the last few years. Because there are a couple things. There's what I'm supposed to be getting, and then there are the actual numbers that have been coming out every time when I'm looking over how the year went for me financially in my investments. And I want to attribute this to the growth of Dow Jones, but I'm not exactly sure. I can say though that the Dow Jones has significantly grown the last, I would say, 16 months. I remember last year I was waiting on it to be 40,000. And I mean, that thing stayed at 39,000 forever, to the point where I stopped even trying to look to see what it was. And then you look up 6 months later, or 6 months ago now, and we were almost at 44. I'm like, well, I'm glad it increased sometime when I wasn't looking, but for it to go that high in that less than a year's time, or almost a year's time, is significant. And even though it's gone down in this last 6 weeks has kind of been bad for the Dow, I am pretty positive that it's going to reach 45 at least by 2025. I don't know about the end of 24. And for us, that news is awesome for us investors, because it teaches us that as long as we are patient, what we're hoping for, which is long-term gains, is attainable. As long as we show up, do what we're supposed to do, dollar cost average, we'll be okay. Half of life, I heard someone say, is just showing up. That means putting in the investment and making the sacrifice today so that tomorrow, hopefully it'll be better, right? But underneath, generally, for all of us, I'm a little bit nerdy. So I was like, okay, but specifically, I want to be able to compare and see, like, am I doing better than average? Because I think I am, but I never put pen and paper to it until like a few weeks ago. And I was able to do the numbers. So for me, these numbers are going back the last 4 or 5 years, because that's all, honestly, all the data I could find, right? And this information, before I go into it, is also just the gains. It's not from my contributions, because I just wanted to see what the beginning balance was, the end balance was, and figure out the percentage if it was positive or negative for me. I have to look at my notes because, it's a few numbers. So for 2020, I was positive 15%. 2021, I was also positive 15%. Mind you, the average return on the stock market is supposed to be 8 to 10%. 8% conservative, 10% liberal. 2022, that was a anomaly year. That was negative 17%, which accounted to about me losing $20,000. But then I can say in 2023, I gained it all back. And that year ended with me being positive 11%. And then this year, right now, the year is not over, but it is November. I am trending to be, my gains have been 13%. All of those years were more than 10%, except for, and even that one that was negative, it was more than 10% in the other way. Does that mean it's going to continue though? I do not know. And I'm preparing myself, because I don't think that's sustainable. I don't think it's tenable for that to happen. Or does this mean that we should change that expectation that investing in the stock market is going to get you 8 to 10%, and maybe it's going to get you 10 to 15? And although I think it's tempting to think about it that way and that it's going to continue this direction, I am going to err on the side of caution and think it wise to say it's probably not, and we need to adjust our expectations. So in doing that in 2025, I don't know if the other foot is going to drop in 2025. It may not. It may be 2026, 2027. But I do think it's wise for us to think that our returns may not be as high as they have been. And I say are because across all of my accounts, I have not been individual stock investing. They're pretty much in funds. You know what I'm saying? And yes, I can think of one that is like target date, so it may be aggressive because I'm younger, but those are probably in like the top, the Tech 7 thing where those are mainly tech companies. I think those are still not going to be able to keep that much growth, except for NVIDIA. NVIDIA may be out of everybody else's league, but like Apple, Amazon, I don't think it's normal or tenable for that to last as long as it's been lasting. You know what I'm saying? So I'm gonna try to adjust my expectations by doing two things. The first one is keeping myself detached from this. When I say detached, I mean that I am not touching this money for hopefully another 30 years. Not in a way that I'm detached that I don't look at it, because I look at it all the time, but I'm detached from it. So like whether it's doing really good or really well, it's kind of like, girl, that's not your business, because you can't touch it in 30 years anyway, right? The second thing that I'm doing to prepare myself is to think of it as normal when it does take a downward position, because it's not if, it's when. I just don't know how soon that when is from today, but it is going to take a downward position. I'm not hoping it takes like a 3% to 5% return on interest for a whole bunch of consecutive years. But if it goes back down to the 8 to 10%, that's normal. And when that happens, I need to not be sad about it, because 8 to 10% is better than 3 to 4% that you would do in something, let's say like a HSA. A high yielding savings account, an HYSA. Yeah, how have you been doing? Are you tracking the same way where you're like doing a little bit better than you expected, 8 to 10%? Or are you doing the 8 to 10% or maybe a little bit less? I would love to know. Please share with me down in the comments, and I will see you guys next week.